Stocks break out throughout the day, but most of the stocks break out in the first half an hour and then they continue to break out. Now, depending on what kind of a trader you are, especially if you're a short term swing trader kind of a thing, holding periods of 3 to 10 days kind of a thing, then you need to think through when you want to enter your breakouts, because the first few minutes the breakout which happen, and especially they are not gap kind of a breakouts. There are like gaps, and gaps are created by some sort of a news, because of a news like earnings news or some other news or uh, some product launch. There will be a gap. Gap is a special case. In the case of gap, you know before the market opens itself that this particular stock is going to gap up, but that's a different kind of a entry. But for a normal breakout kind of an entry, where there is no gap, and if the stock breaks out very quickly in the first few minutes, the reason why it will break out will be because there is a strong buyer there. Now, if you can get into it very quickly, then it allows you to profit from that first day's move. Now, let's look at some of the examples from today, like two examples from today, right? And both of these stocks showed up very early. Here, this was a stock which had earnings that day, and today it started going up, and it was very apparent based on yesterday's action that this stock is likely to break out, right? And now, if you entered this stock in the first 10 minutes or first 15 minutes, you would have captured large part of today's move. Now, if you waited till 10:30 to enter the stock, by that time the stock would have been up 7, 8, 9% also. And if you waited till afternoon to enter the stock, then the stock would have been up 13% or more also. So the later your entry is, the more you are going to pay in terms of the failure if it fails, right? So if you can get in an entry early, that's the ideal thing. Now, how can you get early entries? In order to get early entries, what you need is then either you need to operate from a selected, curated watch list, like a stock like this, Jack Pacific. There was a reason to put it in a watch list because it had a catalyst, it had high volume catalyst on that day, very orderly reversal kind of a setup here, and then the stock was ready for a move. So in that case, you can get a very early entry. Now there can be also another way in which a stock becomes very apparent in first few minutes. Again, this is another curated entry kind of a situation where you knew this stock had a gap, there was a catalyst, and then it was setting up very nicely. And again, in this case, early this stock started breaking out very early, like in the first few minutes itself, right? So that's the kind of opportunities which you want to target. Depends on what kind of a trader you are. Some kind of traders who do swing trading, they're more, or they're core part of their strategy is to try and enter very early in the day. As a result, they are able to capture a large part of the move which happens during the day, and in case if it doesn't work out, then they get stopped out with a smaller loss. Or if the stock moves in your direction very quickly after entry, you can quickly move your stop to a break even, and then you have a best of the situation. Either that trade is going to work in your favor and you're going to make more money, or you're not going to lose money, right? Now, those people, there are second kind of traders who are like looking for confirmation. Now, confirmation is going to cost you money. Any confirmation entry which you look for is going to cost you money in terms of a wider stop, in terms of giving up some of the profits, right? Now, why do people look for confirmation? Because they have this mental block saying, look, a lot of breakouts fail, right? And basically, and that has a lot to do with what kind of breakouts they are trading, basically. Like if you have a very well defined breakout system, then you can have a higher win rate also, because if you have very stringent criteria for selecting what kind of stocks you're going to trade for breakouts. Now, they wait for confirmation. They wait for either a volume confirmation. If you wait for a volume confirmation, the more you wait for a volume confirmation, wider is your stop. And that kind of an entry, if you are going to be doing position trading, yes, it makes sense. If you are going to be doing a trend trading, it makes a lot of sense, because you're going to hold it for months and all. So you can afford to take that kind of a risk. But if you are going to be swing trading, then earlier the entry in a day, or earlier you can detect a breakout, but the better it is. And the way to do that is to have a very curated list of stocks, right? Curated list of stocks which are going to like basically uh, allow you to, you're watching them and you predetermine that, like, if they start breaking out or if they start uh, attracting buyer interest, then you're going to get it. That's one way of doing it. The second way of doing it is putting in orders at a point where a stock is likely to break out. That is called as a buy stop limit order, where you put in an order slightly above where a stock is currently trading in anticipation that it is going to break out. The third way is to scan for breakouts very early in the morning. If you can scan for breakouts in the first 10 minutes, and if you can identify, you have the skill to identify a good breakout, then you can like get into a breakout, and if the breakout moves in your favor, you can move the stop very quickly, and as a result, you can have a high win rate because you can move your stop to break even very quickly. And as a result, if the stock actually breaks out, and the good stocks which break out, they don't come back and come back to the stop level, right? Jack Pacific broke out and it completely kept on going up, or like Plug for that matter today broke out and completely kept going up. And if you have a poor quality breakout, then it is not going to work that way. But if you are a swing trader, think about it. If you can enter early, the earlier the entry, the better it is, because it is going to give you a significant advantage over traders who wait for confirmation. And this is part of the tactics, which was also part of the book which I talked about yesterday's video. To be Crabble talked about the good entries in the first 10 minutes or first 15 minutes, because if there is a genuine buying, then it is just continuing to will continue to go up. Similarly, in my own trading, I look to enter very early, and we have a name for this tactic called fee, find and enter early. So if you can find and enter early as a swing trader, you'll find that you will keep more money and you'll make more money and you might improve your win rates.